Hi, everybody. We're going to quickly take a look at these four markets, ES, crude, gold, and Bitcoin. And before I do that, I want to emphasize the importance of some. So when analyzing a market, there's a couple of mistakes that are made, and one is just focusing on the trend and the when going on the higher time frame, just focusing on just the support within an uptrend or resistance levels within the downtrend. You want to make sure that you're looking at both support and resistance, especially on the daily. All right, and I'm going to show how important this is in setting up intraday trades and having a real clear understanding of where the market is going and all of that. The mistake that's made is, let's say you're trading a 5 minute and you're only looking at an hourly or something like that. You must start at the daily and then see where everything is and focusing on the daily support and resistance first and foremost, and then all the way down so you can trade intermediate time frames or lower time frames. But daily support and resistance, not looking at this, you're going to miss major trades and also have no clue about why the market is doing what it's doing. If you do look at this, it'll be a breeze, meaning you'll have much better understanding of what is the current direction of the market, why this worked, why didn't this work, where the hell are we going, up or down, and when there's a change. So I'm going to show the change in gold, and I'm going to show all that, right? So you'll see, and also you'll see it done systematically in terms of a lot of this. If you know what you're doing, you can kind of see the directional changes because of the focus on support and resistance levels. You can see where the trend changes, because we all know that that's where the stops are, and when markets hit those levels, they have a tendency to react, and those reactions, that liquidity reaction, causes trend changes. Why? Because there's a lot of orders there, and you can sell a lot, causing a down move, or at the support level there's a lot of orders there and you can hit them and causing an up move because of the forced buying of those stops. Anyway, so first thing is support resistance daily on a daily chart. Extremely important, all right, because it puts everything into play. Everything starts to make a lot more sense, and the trade's kind of set up. What you don't want to do is just focus on a pattern. These are the mistakes. Just focusing on a pattern and saying, oh, this pattern did this. Or just focusing in isolation, patterns, in isolation order flow, in isolation whatever, oscillators, in isolation any signal in isolation without understanding daily support resistance, and of course trend. This will put your mind in confusion, or things won't make sense. But as soon as you bring this in, you'll understand what's going on, why it's going on, where it's going. The whole picture makes sense, and I'll show you why. Alright, so the point here is use daily support and resistance to help you make sense of what the hell is going on in the market. Alright, so I'll give an example of the E-mini. And we're in signals already. Alright, anyway, so where am I? Alright, so right here you have E-mini S&P. So immediately you need to know the technical position of what's going on, what's happening, why it's happening, where it's happening, all that, right? So what happened was it went up, down, up, right? Goes goes to this resistance level, and it falls below the prior resistance level. Again, it goes above the resistance level and then breaks back into the range. When it does that, you want to go to a lower time frame and see what's going on and all of that. So as soon as it went up there, they sold and created a change of behavior. That change of behavior right now is in play. So what's the direction? Down. It's down until it hits a pullback important support level. So yes, the trend is up on the daily, but on the daily you'll have two-sided, rotations. And this here, from this level, there was distribution because it hit a high, right? And that distribution led to selling, and that selling created a downtrend on lower time frames, which has within it a change of behavior. How do you know? Because it goes to those resistance levels and falls back below the prior resistance level on heavy volume. In this case, more volume on this down wave than the last 50 down waves. So obviously, trend direction is down. So everyone who's buying, they're going to get screwed. As soon as you see this, you know, okay, I got to go short. Yeah, market is going up, but for the short-term trading, the trend is down. That's what it is. Until you see some change of behavior, change of whatever, sign of strength, it's down. So the bulls are going to get smoked, right? So this was the selling, this was the high, this was the upthrust, broke back within the range and continuing down. So I don't want to go to long. What I'm trying to figure out is how to enter so I can ride the short waves, shorts on the trend down until there's a change. Where will there be a change? We're getting very close to this support level, so it can happen now at any time. Or it'll break the support level and spring it, because that's what the ES did here and before. So, yeah. Trend is up, but the rotations are down. Intraday, what you want to do is you want to jump on, write it down. Whoever got this is making money. What you don't want to do is just be totally lost trying to trade a 5-minute time frame and say, oh, you know, this pattern looks like it's good. That's all going to fail. Or half the time, or more than half the time, it's going to fail. You're going to be lost. Now, you apply the same behavior in range bound. So here on ES, we saw a counter trend, change of behavior off of resistance level, reverting back to the mean or pulling back or whatever. That, you know, you see the clear COB, which is a sign of weakness. Now, what about this shit, which is crude oil? Again, crude oil took out this high. Did it have fall through? No, it broke back within the range. And there it is, the selling. So there's your change of behavior, or whatever you want to call it, sign of weakness. After that, you know the play is on the downside. So after that, all you got to do is figure out how the hell to get in, where to get in, how to get in. So you need to have some intuition about how to get in, because direction has been established. Short-term direction has been established to the downside, no question. So the only question is, where do I get in? Where do I put the stop? How do I ride the move so I can make money? That's it. All right, so we see that currently bears are in control short-term in this sideways trend. Same thing here on gold, right? Where you have this selling, and then it ding-dongs over here. You see this high, 27.48, it goes to 27.61, and I'll explain why I did that too, one second. So now, you will see the selling pressure off of the resistance areas right there. Right there. This is the selling change of behavior that's in play. Right there. So all you have to do is just get in, figure out a way to get in. You get in multiple approaches, right? The key is you know where the direction is going up or down. It's going down after this. Second, you have to know the where to get in and how to get in, and that's all execution related, right? So over here it gave an up thrust, and now it just went down. Now here's the important part. This thing is in an uptrend, so I want to know what the hell are we doing. All right, basically I want to know if the buyers are coming in. When are they going to come in? Because this is a counter trend. This is, it's in an uptrend, and they're selling the highs. So until major support levels are broken, it's just a rotation down, and we see the rotation down. You see the rotation down. Where am I? Right here. Off of this 61 area, you had the selling, the change of behavior or sign of weakness initiating the down moves. Now here's the important part. If the bulls are going to come in, they're going to come in now. And there's evidence that they're bouncing, they're buying something. Where is the evidence? Right here. Meaning from up thrusting 2748, they went down, broke 2630. As they broke 2630, look at they went into an oversold condition, climactic condition, and look at the response. Look at the response. This is the biggest wave in 10 waves with 2.6 times the average up volume. So that is looking like it's buying pressure. So that is a possible change of behavior on the upside. Okay, so I'm very interested now to get in long for at least some type of bounce for an intraday, because it has a high likelihood of popping to the upside until sellers come back in. That right there. Just like what I showed on the downside, right? This selling pressure. This is the buying pressure coming off of support. All right, right here, 2.6. As it pulls back, the pullback is just too heavy of a volume. Right, too heavy. The volume's too heavy. It cannot be a pullback. All right. What you have here is that climax automatic rally thing, which is really a climax and a sign of strength. Automatic rally is the sign of strength. It's what you won't see elaborated on online, but that's what it is. All right. Now you see the same thing I'm going to apply on Bitcoin to show you clearly these reactions. So we have support, resistance here on the daily. It pops up above, and as you know, when it makes those highs, again the same thing's gonna give you a counter trend back, meaning it takes out the high, reaching its objective, selling into the high, and that selling turns into a change of behavior or a sign of weakness. As it takes out the high, they sell. Why? Because breakout buyers are going to buy, so they sell, and they offload a lot. And because they're selling a lot, it creates a sign of weakness or a change of behavior on lower time frames, and that leads to a downtrend on the lower time frames, which will go to your support levels. It's the way the market works. All right, and I'm showing you this right here. There's the break back in. It takes out 10,5,325 takes it out 105,325 by going to 108,000, and from that level breaks back in, heavy selling or profit taking, we don't care, but it initiates the down move right there. You see? How do I know? Do I need an indicator? No. Yeah, actually I do. But this right here is 3 times the average down volume and the biggest down wave volume in 33 waves. That's why their attempt to go up failed, because from that resistance on the daily, someone profit take or selling, whatever, that initiated this. So what does this mean? It means downtrend. Downtrend, which means market is going down. And I'm talking about short term on an intraday basis. It's going to do that until the buyers step back in and reverse it back in a trending in the direction of the trend. Right? So that's what's going on. Just like they're doing now in gold. In gold, right here. Buying. The same thing's going to happen in Bitcoin, but first it has to go down, and then buyers going to step in, and you'll see it. All right. So what is the purpose of all this? The purpose of all this is you must have understanding of the market going up or down. Up or down, you need the daily support and resistance levels, and then go to a lower time frame than the daily and see the reaction on it. So I'm showing you the daily support and resistance level, what happened when the price went to those levels, and whether there was a reaction. That reaction is a change of behavior or a sign of strength or a sign of weakness. And that sign of strength or weakness initiates a shorter term trend that gives you the direction of the overall market, and typically goes back down to a level. So in the case of resistance, obviously it's going to come down to a support level. In case of support level, will go up to a resistance. So again, we see this in the ES here. When it went up there, boom, crack. Right there. We see this in crude oil, crack, right there. This is a sideways trend, but you see the crack. It doesn't matter if you up, down, whatever, sideways. You'll see, because why doesn't it matter? Because it's support and resistance that matters. Off of those areas, you have reactions that create trends, and you can know that those trends are in play by looking specifically for change of behaviors, aka sign of strength, sign of weakness. Right? So this is what's going on here. Off of the 70-50, when it took it out, when it went to 71, it took out 70-50, price took out 70-50, and then reacted. And you can see these reactions. Same here. It took out 27.48 by going to 27.61, reacted, back down, ding, 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 ding. Now it's at that support level, which is 26.30 in gold, and now it's reacting, trying to break back within the range, and you see that volume come in. Same thing with the Bitcoin. When it went up to 105,000 plus, all the way up to 108, reacted right there. So what do you think is going to happen? It's going to go down. Sellers are in control. And I don't know where it's going to go, but I think the support levels make it obvious that, you have 94,000 and then 90,000. So we have to see how they react here. right? All right. So again, this is for educational purposes only. Trade at your own risk. Just trying to give a little education here to the Wyckoff trading community. All right. Take care. Have a good day. Bye.